Hey folks, welcome to Thursday the 13th, and we have inflation printing year on year. The CPI coming in, of course, yesterday, 7%. So big readings. We haven't had this since the 80s, 39 years since we've had this level of inflation. We are going to do a separate video just analyzing how the markets responded to this level of inflation over the last, well, 50 years, really, 40, 50 years. But for today, we are now waking up to the markets. You're seeing that dollar a lot weaker now, under pressure from this level of inflation. Euro is availing of that upside. Cable coming into Cable's had a great excursion to the upside, coming into resistance now at the R1 and a very significant trend. So let's get over and have a look at this on the charts. You see the euro now picking up its socks really down here off of the 12 125s. That is the low. If I take my little noggin off the screen, you can see that's the low from the week way back here, the week ending or starting the 30th of September 2019. All right, 2019. Little did we know what was to come. But really, target here is going to be 15905s for me, and actually, truth be told, it should be here at the high of the week of the 8th of June 2020. So really, I think we can, regardless of these levels here, and I just have to update this one, but regardless of these levels, I think we're in a compression area, right, where we can easily kind of come back on up here as we then come into March, whereby we're going to be getting the, well, presumably we're going to get the first interest rate hike since coming out and unwinding the balance sheet from the global financial crisis. So that's the euro. Really, good longs. Well, really, to look at that, we can go and look at the dollar down here. So let's look at the dollar on the weekly chart, the kind of corresponding weekly chart. And here's the Dixie. Now there is this mega trend. It has been a friend, if you like, for us on the mega trend. However, we're now trading down to it from above. Looks like there should have been support here this morning, but you can see already down bottom right of your screen, sellers are working down on this level. And so far, since the European Open, we just cannot hold above that trend right now. So support is to come in 94.63s on the Dixie. It'll be very interesting to see what happens down here in the S1 for the Dixie now this morning. So you can really time your euro trades. For me, I'd let this area sort of shake out a little bit first before I want to get long or short the euro. I think this is a very tricky trade, but I would like to get into a long duration, multi-week, if not multi-month trade on the euro for the longs. Should we get that sort of pullback onto the 14 120s and then kind of ramp on up? Anyway, enough about currencies. Well, actually, before we go off the currencies, cable here now. Here's cable on the weekly. You can see just this downtrend put in from the multiple weeks since the 26th of July, the week of the 26th of July, down trend here. So we'll make this a little bit bigger. We'll leave it in black for now. But you can see this morning, top center, cable is just flirting with trading into that R1 level right now. I think there's a lot of risk in the UK economy right now with Bojo really getting the pressure on to quit. If I was a gambling man, I would be putting on money on that he does get put out. So this talk that maybe they're going to wait for the May elections. I don't think so. I think the pressure is mounting on Bojo here. So yeah. Anyway, cable very strong. I don't know about buying it up here. I would be kind of going against this R1, fading the upside at the moment. So if you see a weak push into the R1 at the shorts, should look to get involved there. Gold. I mean, gold is starting to really come into its own now on this 7% inflation reading yesterday. You see a little pullback into the S1 this morning, but the figure coming out yesterday, let's see, half one. So it kind of came out here. You can see the spread on this candle at this point. Yesterday kind of came, well, it had used the APAC low to then thrust on up and then continue with the bid, but we're back S1 support this morning. Look, I think the bottom line is 1839's target to the upside. And if we go out on the bigger chart and look at gold, you can see where that resistance area is coming in up here. So multiple highs put in July 2021 and July into early August. Well, so nice target there. I think we actually will get onto 1854s and above on the back of this type of reading on the inflation. Yeah, I mean, I think that's where we're going. Really, much higher in gold, albeit a slow trade. I think there are easier ways to make money in these markets. Nasdaq couldn't really get, well, in fact, it just couldn't get over the 16,000 yesterday. Looking on the daily chart, you can, or the daily chart here, you can see got up bid quite early in the session since we opened. And resistance found at 16,000, drifted off into the close, settled off. Not a great big day yesterday on equities, despite expectations for a big one. But really, bottom line is 7% was priced into the market, and that's that, right? So, we would have had a massively volatile day. Should it have come in at like a, 7.5, 8, some 8 would be crazy, but we weren't going to get anything like that. And inversely, I think the market, I would have been interested to see how it would react on a lower reading. The obvious thing would be we would rally a lot higher in equities if we had a soft reading yesterday and potential dissipation of the inflation environment, but that's not it. Anyway, I think shorts are going to work on this market today. I don't see much enthusiastic buying here at the 16,000. Pullbacks into the 100, I think could get a flush to the S2 and then find some buyers. I really just do want to sit in my haunches and kind of see how this market trades today. But going from the SPOOs, looking at the SPOOs, you can see here, sure, we pushed into that 47.35's nice target yesterday, but all just on the open, pulled back to this nice area of support. Found the buyers, has still found the buyers at the top of this area. So, this tells me that we are buoyant and well supported in equities. I do want to see how we trade in the 47.35s, and if we do trade well, we'll push above. You'll get your pullback. Look for the longs, maybe even a little bit of flushing. Look for the longs. We should get on up. But if we come back up here and you see like maybe an hourly bar close below, I'd be looking to work the shorts and fade any strength above at that time. So for me, energy is a better trade at the moment. Definitely. The Dow, very similar to the SPOOs. Here we are in the 60 minutes. Had the dip buying down here on what was this, Monday, Tuesday, and those guys are still on side. 36.58's target on the upside, and strength not as obvious here yesterday on the Dow, but I still think this market is quite well supported. It's all possible for us to retest on the trend like this because we haven't really had a clean retest. You can see here it scrubbed the trend. I still do believe the trend will come in at some point, as it has done in the past. You can see in this little knot of an area here, there is a bit of indecision at that level. But yeah, more upside, I think, given the 7% was priced in. And then finally, well, actually not finally. First of all, the bonds T-notes. You can see we're holding 128 8.5s now on the floor in the APAC trade. Just to give you an idea of the grander scheme of things, we've come into this area here, right? We've come into that 128 8.5s. We could make that pullback to trend before the next sort of directionality on these bonds, but I think given the 7% was priced in, it's shown me that these bonds are a little cheap. We might, get a little bit of dissipation on the appreciation of the real yield. And yeah, the bonds are looking pretty good now, longs, I think. And then, of course, oil. And target achieved. Ring the bell, done deal. 83 on the highs yesterday. Actually, a higher, about 83.21's on the high yesterday, but 83 is done and dusted. Now, the thing is, Joe Biden did sanction the release from the SPR, or had sanctioned for him a release from the SPR at this point, the week of the 15th of November. However, I was reading this morning that 18 million barrels of the release have come out this morning and have been assigned. That could put the skits on WTI just a little bit. We have achieved quite a good push up here. I think the market needs a little bit of steadying off, just a little bit of pullback. We're certainly seeing that in this morning's trade. We're down about 0.43% on the market right now. I do think it's a pullback day for oil, notwithstanding headline risk, that is, of course. But yeah, targets down on oil. Targets are down, take it down. So that's about it for this pre-US session. Thanks for tuning in. Please do like and subscribe on YouTube, and do love to have a comment, get a conversation going. I know some of the boys and girls were having a good chat on that Nat Gas and Nord Stream 2 video that we did a couple of weeks ago. But yeah, we'll talk to you later. Have a good session.